afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra, and with me is Reema Tendulkar. And we are, of course, looking at the markets, which have seen a sharp recovery from the lows. Midcap index is up 430 points. But the big news, of course, is the fact that we have Sun Pharma's numbers at the bottom of your screen, and looks like a largely inline set of numbers. We are looking at revenues at 11,241 crore rupees, which compares with a poll of 11,180 crore rupees. Also, if you look at the EBITDA, absolutely in line at 3,004 crore rupees versus a CNBC-TV18 poll of 3,009 crore rupees, which means that this time around margins have come in line with the expectation. So the expectation on the margin front was 26.9%, and margins have come in at 26.7%. Of course, we'll get in Ekta as well to tell us more about these numbers, but for now, it looks like an absolutely inline set of numbers as well. And remember, it did well after its Q2 numbers, hit a 52-week high level, and the momentum was expected to continue this time as well, despite the weak numbers that we saw from Taro. And growth was to be led by their global specialty business, and that is something we'll need more details on as well. How much has the specialty business grown by? Because that one was up around 27.5% on a YOY basis in the quarter gone by. So for now, yes, the numbers absolutely in line with the expectations. The stock, though, is down around 1% as we speak. But overall, the stock has done well in the last couple of trading sessions. But for now, we have the numbers absolutely in line with what the street was working with. Of course, we'll get Ekta in just a bit to tell us more about what the internals would have looked like and get in an expert opinion on the numbers as well. But for now, the stock has come off from the highs of the day. It's down around 1%. In fact, we do have Ekta with us. Ekta, looks like an inline set.
Hi, yes, thanks for that. Well, it's absolutely an inline set of numbers for Sun Pharma. Zero surprises which have come through, at least in terms of what they have reported on the P&L. So the revenue growth is around 14% on a year-on-year basis. We were anticipating around a 13% growth. The margins also have come in at around 26 to 27 odd percent. The EBITDA growth is around 15%. We were anticipating around 3,000 odd crores, and that's where it's come in at. And the profit growth is in single digits of around 5 odd percent. So no surprises which have come in for the numbers. And remember that the stock has recovered from the day's low. It's already run up significantly. It's close to its 52-week high. So the street is anticipating that the momentum with regards to the specialty business, something that you mentioned that, in the previous quarter, it was up around 27.5% on a year-on-year basis. So that is expected to continue into this quarter as well. So the expectation is that the driver will be the specialty business, and maybe India should probably grow in double digits as well. Remember, these numbers are reported on the back of a poor quarter from Taro on a year-on-year basis, which is their US arm. So despite that, they have reported around a 14% growth on a year-on-year basis. So the key driver is expected to be specialty as well as the India business. In terms of commentary, that's really what most of the pharma companies do react to at the end of the day. So the Halol plant, what the status is after the import alert, is something that the street will be watching out for. What is the momentum that we can see in terms of the global specialty sales? Because estimates are that they could probably reach $1 billion in terms of sales in the next couple of years. Whether or not they are on track for that will be a couple of key ponderables this time round. But overall, in terms of the P&L and what they've reported, we will wait by for the geographic breakup. But like you can see, there is a recovery which has taken place in terms of the stock. No surprises which has come through in terms of the P&L this quarter.
Okay, thank you very much, Ekta, for that. Let's talk about the market technicals. There is a big recovery underway in the broader markets, and now the benchmark indices are also in the green. Shrikant Chauhan of Kotak Securities is now joining in for a technical check on the markets. Shrikant, on Friday was that big breakdown of the trading range. We breached the 17,800. Yesterday as well, we went to an intraday low of 17,400, but managed to recover back to 17,650. And today as well, there hasn't been a big fall in the markets. We've sort of stayed afloat. Are you getting the sense this worst of the volatility, the worst of the weakness is now behind us? The positioning is lightened, and we could see a bit of a relief rally and an uptick in the markets?
Yeah, good afternoon, Riba. I think, the markets are very clearly into a broader range. It is not like going to cross the level of 17,800 so easily. And on the downside, 17,500 is going to act as major support for it. So till the markets are not crossing 17,800, I think we need to be careful if the markets are heading towards those levels. But in the short term, I'm going to say in just next 1 or 2 days of time, if we see the markets are very close to those levels, then there we should look for taking some contra bets in the market. But on the other side, if we see any drop because of any reason, then close to 17,400 or 17,200, we should be buyer in the market. We are of the view that this fall is going to complete the corrective pattern of the entire sell-off that we are seeing since last almost 2 months. So I think very close to 17,200, if we see the markets are falling because of maybe budget or because of any reason, then we should be a very confident buyer in the market.
Okay, confident buyer in the market. In a market like this, Srikanth, what would your individual technical picks be?
Yeah, see, like based on the overall momentum of the sectors, we like fertilizer stocks. In that, we like RCF, Rashtriya Chemical Fertilizer, which is currently trading at 120. There we feel that the stock is already into all-time high and it is going to surpass its immediate highest level of 145, 146. So broader formation is clearly indicating us that the stock has already corrected to its important support areas of 110, 115. And from there, again, it is reversing back. So it's a buy at current levels with a stop loss around 105. We can again expect 145 to 160 in next maybe a few days or few weeks. The other stock which we like is from the infra space, and we like IRB Infra, which is currently trading at 280, 281. There also we are expecting stock to move towards 310, 320 in next maybe couple of weeks. But it's a buy at current levels because the stock is very close to its important support area.
Thank you very much for that. For the markets, the big event today is going to be the Adani Fpo and whether it's going to be successful. Prashant joins in with an update. Prashant?
You know, so we're just refreshing that page, Rima and Sonal, you know, and it looks like it's racing through and racing through very well. This is as of 1:39 p.m. on the BSE website. You know, it basically shows that the QIB portion is done 0.97 times. Now, this is important because one of the sort of criterion for a follow-on public offering to go through is that the QIB portion, x the anchor portion, x the anchor allotment has to be subscribed one time. You know, this is almost there, 0.97. The overall issue has been subscribed 0.56 times, so about 56% of the issue has been done. And the rule for the success of a follow-on is that 90% of the overall issue has to be subscribed. So, I mean, this is still some way to go, but the QIB portion has been done almost, you know, sort of completely 0.97. And I think that we should see that moving higher as well. The HNI portion, the non-institutional investor category, is seen subscriptions of over 1.16 time is what we've seen there. The retail category, that as expected, of course, is still tepid. It is just about 0.08 times or so in terms of the subscription. The total number is up on your screen now, 56%. And as I said, you know, for the follow-on to go through, you need at least a 90-odd% subscription for the issue. Let's just quickly take a look at the Adani kind of stocks and see if there is any sort of reaction which is coming through. It's been, of course, a much better day from the word go today on the Adani Group stocks as compared to the previous 2 or 3 days. I think there is a bit of a surge. You look at Adani Ports, which is now up at the day's high, 629 or so on Adani Ports. Ambuja Cements is, I think, at the day's high. That's up about 6.5 odd percent, 412, 413. You know, you've got the other names, Adani Power, which is down 5%, no real movement there. Adani Enterprises has crossed that 3,000 rupee mark. That should come up. It's up 5.25%. Although, of course, the FPO price, the lower end of the FPO price is 3,100 something. So there is still a bit of a gap there. Adani Transmission saw recovery first time yesterday from the lows, and today, since the morning, it's been trading with some gains off the lows. It's about 2% higher at this point in time. Adani Total Gas is the only one which is still limit down about 10% or so, 2,108. I'm assuming that this is the numbers that I quoted will be fast changing, and we'll keep putting the latest numbers out for our viewers in terms of the categories and, of course, the overall subscription as well. But as of 139, 140 today, the issue is getting done about 56% total, guys.
Okay, all
You know,
right.
just on the subject of Adani, you know, Total Gas, the H1 FY23 EPS, I was just checking that.
Yeah, the valuations are
It was
skyrocketing,
2.7
yes.
rupees, right? Even if you assume that for the full year, the company is going to be doing a valuation, EPS of 6 rupees at the current price of 2,100, the FY23 PE is 350 times, right? And there's a similar case even for Adani Green.
Yeah.
Where the H1 EPS is 2 rupees. If you assume 4 rupees, 5 rupees, whatever you want to assume for FY23 in the second half of the year, at the current market price of 1,200 rupees, it's still very expensive. But that's not the case for, say, an Adani Power. Adani Power, if you check the valuations, it's actually in like 10, 15 times, depending on what you want to assume as FY23 EPS. So I'm saying these are the two companies where the valuations are on the higher side.
Oh, yes, it is. So that's the update as far as the Adani stocks are concerned. For our own markets, yes, the sharp recovery in the mid-cap index in the last couple of minutes is something that we are looking at. And M&M and ITC also have the day's high. So these stocks are very important from a budget perspective also. So, of course, any update on these is something that we'll be analyzing.
So the other pack is banks, right?
Yes.
Because banks all sold off. So they saw the bulk of the collateral damage. Bank Nifty, as of yesterday's close, was down some 6.5% in 3 days flat. So that's the other space, I mean, which I think at least some pressure may come off there with this one going through. I mean, that's been all the talk in terms of exposure to the group and what may happen. We, for example, had the management of PNB with us earlier who told us about their exposure. Of course, everything getting serviced, no problems. But at the margin, that has been the worry. I mean, there's no new reason why bank stocks should have sold off the way they did. With this issue, at least for now, with this FPO out of the way, maybe some of the spotlight comes off and banks also may sort of see some relief. How much, of course, is a question. But that's the other focal point, apart from the group stocks themselves, which I think should see some action.
Oh, it is at the day's high, right? So, of course, we'll keep tracking that action for you. But it's time now for the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 today, but in case you missed it, here is today's question. What was the fiscal deficit to GDP for FY22 revised to in the last budget? And your options are A, 6.6%, B, 6.7%, C, 6.8%, and D, 6.9%. Send us your answers on Twitter. Post your answer as a comment on the question tweet on CNBC-TV18 News. Use the hashtag #BudgetWithCNBC-TV18. Now hurry and send us your answers. Remember, we will announce the winner at 3 p.m. today. Back, you're still tuned into Midcap Radar on CNBC-TV18. While the markets are in focus, we also have a lot of earnings that we will be tracking for you. So let's get in Mr. Vijay K. Thadani, who's the Vice Chairman and Managing Director at NIIT, to decode their earnings. They reported it just a while back, and it looked like a good set of numbers. On a consolidated basis, their revenues are up 18.5%. Margins, too, have expanded by 550 basis points, and profits have come in at 55 crores versus 39.5 crore rupees. That is on a quarter-on-quarter basis. Mr. Thadani, good afternoon. Thank you so much for joining us here on CNBC-TV18. Can you give us a sense of your CLG segment? Because that saw recovery. In Q2, it was impacted by one of your big clients. But this time around, there has been a recovery. Do you maintain your guidance, or will you be able to do better than what you had guided for earlier? And what about margins? You have seen a growth there as well. What is the margin guidance that you can give us?
Yeah. So, first of all, I think in line with how we had projected this quarter, when we had said there would be a reasonable quarter-on-quarter growth. So we've had a very decent quarter-on-quarter growth in revenue, as well as an improvement in margin, because A, we were able to utilize our resources better, manage our costs better, and our new clients started delivering faster. Though the uncertainty in the environment remains, and our order intake and the new contracts that we received this quarter have raised our revenue visibility to 321 million. So I think these are some very, very positive signs. And this part of it was already baked into our results. And I think, therefore, our projections for the year to remain at 20% odd margin, and I'm not talking about the organic part, and having a single-digit growth overall year on year on the business stays as it is. I think what has also added in this quarter is the acquisition that we made of St. Charles Consulting Group. And that acquisition and its impact is also felt for the 55 days that the acquisition was part of the group. And that is also beautifying the numbers. Of course, they are going to be with us for the rest of the year as well. And therefore, for the year, that impact will also be felt. But I thought I'll divide the work in two parts. One is our organic, and the second is the impact of the acquisition.
So, Mr. Thadani, just to confirm the numbers, the CLG, the Corporate Learning Group organic guidance, ex of the St. Charles acquisition, you are maintaining that revenues will be high single digit and EBITDA margins of 20%, right?
That's right.
Okay. Now, in Q4, you will have full 3 months of the acquired company. What could that contribute? Could you give us an indication of what Q4 will look like with the acquisition for the CLG group?
Yeah. So if we take the St. Charles group into consideration, then our growth is more likely to be 14 to 15%.
And on margins, sir?
In revenue.
And on margin, sir?
Yeah, I said our revenue growth for the year will be 14 to 15%, including St. Charles on a constant currency basis.
Got that. And so the CLG EBITDA margins, including the acquisition, what would that number stand at for the full year?
Yeah, it will be little north of what we have of CLG organic, because this acquisition is both margin accretive in addition to being profit accretive. I mean, margin and profit accretive, as you can make out even in the numbers that we have declared.
How much north, sir? Your CLG organic margin guidance is 20%. So
yes,
this would be 22.
It will be about 50 to 100 basis points more.
50 to 100. Okay.
Okay, so that is on the CLG business. Can you also tell us what is the update on the demerger? You had spoken about it earlier. There are plans. These two segments would be listed separately. Where are we in this process?
Yeah, so we are absolutely on schedule. The first motion was heard, and the second motion is due after we get all the regulatory clearances. And therefore, as we said in the first quarter of the next financial year, we should have the demerger complete, obviously subject to all the other checks to be made, as well as all the other approvals to be made or to be received, for which we don't see any difficulty as of now.
Okay. Sir, SNC, are you maintaining the revenue growth guidance of 50%, or is there going to be any change in that for the full year? And even the EBITDA on Skills and Career Group, it's at 6.3 crores. It's higher quarter on quarter, but it's lower on a year-on-year basis.
Yeah. So let's answer both the questions separately. So first of all, Skills and Careers Group, as you know, of the new hires, it's a bit dependent on the new hires which get joined or get new offers that get rolled out to the fresh joinees. In the last quarter, as we could see, technology segment has slowed down on the offers they made. In fact, they made lesser offers than they make normally in this period. And on the other hand, the banks and financial services actually did very well in terms of new offers. Now, banks and financial services is a smaller portion of the total business. We believe this weakness in technology sector, which is technology hiring, is likely to continue through quarter four, which anyway is meant to be a weak quarter because no hiring takes place as such. People are getting ready with their exams and fresh hires at least. So to that extent, I think the impact will be felt. And we do believe that our guidance there will be short of 50%. I think it would be more like mid 40 to low 40% on a year-on-year basis.
So between 40 to 45% revenue growth, right? For SNC versus your 50% guidance. And even this...
And let me just complete on the margin. On the margin, on the other hand, I think we have done better, and there is a good chance that we will continue to maintain that.
Okay, so Mr. Tharani, out of time, but thank you very much for joining in. On a more leisurely day, we will continue this conversation to talk about the trends and the outlook for next year. Thank you very much for joining. That's NIIT for you.
Yes, that's about NIIT. Just a word on IOC numbers as well, because they have come in lower than estimates. The expectation was that since BPCL reported good set of numbers, that could be the case this time around for IOC as well, but it is a miss. And primarily, apart from, I'm just calculating the reported GRMs as well, but if we look at the IOC amongst all the three oil marketing companies has better GRMs because their refining process is such that it tends to report higher GRMs than the other companies, but it also has a petrochemical segment. So that's where the company has actually reported a loss which has expanded. This is something that we have seen across the board in Reliance Industries, yesterday in Gale's numbers as well, that the petrochemical segment did see a sharp decline. And this time around, companies' EBITDA in the petrochemical segment has expanded to around 600 crore rupees versus 129 crore rupees on a quarter-on-quarter basis. So that's one of the major reasons why it has seen such a big decline as far as their numbers are concerned. Quickly looking at the reported GRMs as well, I will just take a look and see how this has really looked, but it looks like it's a miss on refining as well. The GRMs this time around were expected to be higher, also because the refining cracks had improved for the sector overall. Petrol cracks were higher, diesel still in the negative, but it looked better than what the quarter gone by looked like. So yes, it is a big miss. Revenues have come in at 2.04 lakh crore rupees, which is higher, but EBITDA is lower at 3,595 crore rupees, and this is versus 7,370 crore rupees. This time around, refining margins were expected to be higher, as I said, around $15 per barrel, but it has come in much lower. We'll get to the number in a bit, but yes, looks like a miss. The stock is off the highs of the day. We'll need more details, but it is led by both the refining segment and the petchem segment for IOC as well. We'll do one thing. We will quickly slip into a short break for now, but we'll get you more details on the other side of the short break.